Okay, folks, let me kick proceedings off and welcome you to this session. Thanks for being here. The topic, as I'm sure you all know anyway, is capital for clean energy. And we've got three very interesting speakers to discuss what's happening in that field at the moment. Again, as I'm sure you all know, but let me just start off by stating the obvious, because that's part of a moderator's job. The clean energy field has been exploding in the last decade. One of the most important things here is the incredible drop in the cost of clean energy. If you look at what's happened to the LCOE of power from various different sources, then on average in the US today, solar and wind are the least expensive ways of producing power, which is definitely not the case as little as 7 or 8 years ago. And there are parts of the country where solar or wind will undercut almost every other power source very significantly. So there's been a really big change, and there's been an increase in investment in clean energy. Now, if we're going to solve the climate problem, and obviously a lot of the interest in clean energy is driven by the climate problem, we have not just to grow clean energy, but to grow it at an absolutely massive rate. 66% of US megawatt hours come from coal or gas, and we have to replace those if we're going to come anywhere near meeting the Paris targets. And that means installing a huge amount of clean energy. And many times what we've seen installed in the last decade. So that's why we're talking really about capital for clean energy. That's going to require enormous investments. It depends a bit, obviously, on how the costs play out. The costs are dropping quite fast, but conservatively, it's going to cost a couple of $1 trillion in gross investment there. So capital for clean energy is going to be a really important issue, and possibly the availability of capital could be a constraint. Probably less so in the US than in some other countries. I think the capital markets work well here, and there's all the evidence is that money is available. But if you talk about clean energy in India or Africa, where it's actually very important indeed, obviously the providing capital in those places is much more of a challenge. Anyway, our panelists are Jiong Ma from Braemar Energy Ventures, which is a VC firm. Then we've got Thomas Byrne from CleanCapital, and Martin Torres from BlackRock. BlackRock, I think, needs very little explanation. But all of them are involved in funding clean capital in clean energy in various different ways. And the way we're going to proceed is I'm going to ask each of the panelists to talk about their company's involvement in providing capital for clean energy. What level are they providing capital? What stage of the investment process are they providing, growth process are they providing capital? And how do they see the outlook for potential growth in capital availability for clean energy? And I'll start with Jiong Ma, because she's at the really basic level in VC investments. Jiong, all yours.
Great. Well, thank you. So we are the firm I'm with is called Braemar Energy Ventures. We're based in New York City, actually. We invest in mostly in North America and partially in Europe as well. And so we're ventures. We're looking at a more investing in the innovation stage. And so Series A, Series B, and we've been around about 16 years, the firm, and so we build a lot of companies. Right now, we've got 58 companies in our portfolio, ranging from electric vehicle charging infrastructure to like new business model creation of ride sharing, to technology for managing buildings and managing the grid, and building marketplace to bring more renewable online. And a lot of innovations also in sort of the platform, to how do you creating new platform. But overall, we are sort of the early part of the innovation ecosystem and creation. And I can share a lot more later in the panel.
Thank you. Thomas Byrne, I'm the CEO of CleanCapital. CleanCapital launched in late 2015. Myself and my co-founders had been involved in the clean energy space for nearly a decade each, observing that a particular segment of the clean energy market, that being the more distributed segment of the energy market, was the one area that was really lacking capital, yet it was a key segment of the market for the transitioning energy sector. So we launched CleanCapital to figure out ways to get more institutional capital into the distributed generation clean energy space. To date, that's meant generally solar assets, small-scale solar, so you could think anything from a rooftop solar on top of a target to a municipality having solar or a community college. We partnered in 2018, and we've funded about $500 million of deals to date. We do it through two investment vehicles. One's with Carval, which is the investment arm of Cargill. The other one's with BlackRock. And we're focused on deploying not just into solar, but into anything that falls into distributed generation. Increasingly, that's starting to look like storage as well. And to give numbers on the magnitude of what, I think it's an exciting time to be in clean energy, and certainly in distributed generation. The energy landscape's transitioning rapidly, and it's becoming cleaner and more distributed. And while on some fronts there's challenges on the policy front that are not getting satisfied, but there's what we're observing, at least at CleanCapital, is there's an increasing appetite from institutional investors, from capital providers. There's new entrants into the market. I just read NCAP, which is one of the largest oil and gas private equity firms, is now putting a huge initiative into clean energy, and I think that speaks to where the sector is going. So I think it's while there's policy challenges that still need to be overcome, the markets and private investment capital is certainly starting to push behind clean energy.
Great. Martin Torres. I manage a business at BlackRock that raises capital from institutional investors to invest in renewable energy generating projects. So we largely focus on deploying capital into the projects themselves, into the assets. At times we're investing through platforms, so through companies that actually develop the projects, really with a view toward sort of having our capital flow through the company into projects as they're developed over time. We manage now about $6 billion of capital. We've invested in over 250 projects around the world. And those projects range from onshore wind, offshore wind, utility scale solar, so sort of the mega solar projects, distributed level solar projects, and more we're seeing opportunities in battery storage as well. So we invest across the Americas, across Europe, in the Asia Pacific region, so really do have kind of a global focus. Now, in addition to managing the capital that we've raised and making the investments, we also spend a lot of time with our institutional investor clients raising capital. And to that end, we have seen over the last 8 years, while the business has been growing at BlackRock, more and more of a focus among pension funds, insurance companies, high net worth individuals, more of a focus on the sector. Geographically, we do see sort of different drivers. In Europe, for example, ESG and sustainability drive a lot of investment decisions at pension funds and insurance companies. It's not something that you have to really sell to them. It's sort of already ingrained in how they think. When we think about sort of investor drivers across the U.S. and really into kind of a lot of the Asia Pacific region, it's more fundamental economics. Investors want to deploy capital into infrastructure. Renewables represents a significant percentage of the addressable market for infrastructure. The economics make sense, so they invest. It's a little bit less ESG driven and sustainability driven.
Interesting point, but do you see any change in the attitude towards ESG in the US and the Asia Pacific? I mean, I sort of detect a little bit of a change there. But
oh no, we absolutely do. I mean, we're essentially fundraising for 2 years every 3-year cycle. So we're pretty consistently in front of our investors and in front of the firm's client base more broadly. And when we raised the first fund in 2011, you sort of consciously were not talking about sustainability and ESG. It was really trying to drive home, sort of the understanding that the projects are economic on their own, and the technology is not, it's not novel. And that dialogue has shifted, and thinking specifically in the U.S., to a point now where you know, although ESG and sustainability may not be driving investment decisions as much as they are in Europe, it's certainly a topic of conversation. And I think pension funds and insurance companies here are starting to have that as a consideration.
Yeah, let me just add a little bit. I think, you know, we went through like one cycle already. You know, if you look at the solar, a lot of investors lost so much money in the solar space in 2007-8 sort of time frame. And now the technology is so mature, you know, it made a lot more sense today. And for, you know, institutional investor deploy like, I guess, the capitals to scale those projects because the technology totally de-risk and it makes huge amount of sense economically. And so I think that's sort of the, so today I think from our, you know, we also raise fund from institutional investors as well. We have pension fund, endowment, and also some strategic. And, but now the, you know, the whole distributed, you know, ecosystem is not totally, I guess the challenge is not totally solved, right? You know, you have solar, you have wind, but you also have to have a storage. You like the building itself, and the building itself has a lot of challenges today. But how do we meet renewable goals? Like New York City has very aggressive goals for building to be carbon neutral. If you look at California, same thing, you need to be, you know, carbon 100% renewable by 2040. So those are things that we see there's, from ventures perspective, there's a lot of opportunities to put you know, data science, AI, and other sort of technologies into the sector to build a platform, build an ecosystem to help scale and make sense for, you know, BlackRock and other investors to deploy massive capital to kind of really drive the adoption. So that's kind of how the institutional investor also think in a different bucket of money. And return, I guess this is another question for return. I think, you know, because, you know, we went through the bubble, one cycle, you have not seen huge amount of return, you know, in comparison with some other sectors, you know, to have a really good performance. But now, because I think the climate change, the city itself, and there's so many sort of forces coming together, we see opportunities to actually producing really good returns for our investors as well. So,
Martin, do you see returns being good in this space?
We do, and again, you know, from our, you know, the original thesis, you know, going back to when the platform was established, many of us have been in the business for a long time before that, but you know, the thesis has always been to earn good returns investing in the sector. I mean, it's really hard to go and convince a pension fund or an insurance company that they should make an investment for reasons, you know, that are dislocated from earning positive returns given their constituents and their overall mandate. So, you know, and again, we invest in projects, in the assets, so it's a little bit of a different construct than investing in technology, you know, totally different risks, totally different return, you know, prospects at the end of the day. Infrastructure is known for, you know, sort of producing, you know, steadier returns over time, much lower downside protection, because you've got physical assets that sell a product that a market uses, but as a result, you also don't have, you know, a lot of room for upside. It's just pretty stable.
When we were talking outside, you mentioned that, I thought it was interesting, that solar and wind are now like mature technologies and mature industries. And it's can you comment on that a bit?
Yeah, so and along it filters into the conversation about ESG. I think Martin's point, every time the term ESG comes up, it's a little frustrating because it's a tagline that sometimes blurs the reality of the asset class. The reality of solar and wind in a low yield environment, in an increasingly non-fossil environment, is a really good investment. Would you rather put your money into solar and wind as you look out over the next 10 years or into a new coal plant? I think it's just a very risky prospect to have money in some fossil fuels. So just from strictly an investment perspective, it is a secure, safer investment. It's yielding, it has a good yield profile, good risk-adjusted return compared to a treasury bond or something on the bond cycle. And when you compare it to other energy investments, it's a good investment. So I think the pitch that we let BlackRock make, so we don't have to make it, to the pension funds is this is a good investment if you're a long-term investor, period, full stop. Don't worry about ESG at all, because that's actually the truth of the matter. And when you look at, to answer your question more specifically, when you look at solar and wind, when we were looking at deals 10 years ago, it was a much more fragmented, less transparent space than it is now. There's still some opaqueness to it, but it's much more of a mature market. Right now, I use the example with you, if we see a new deal on the market, we could tell you within 2% where that solar project is going to trade. 10 years ago, that was probably more like 10%. You know, it could trade at 100 million, it could trade at 140 million. And there's different cases, reasons for that. So that just is a reflection that it's a much more mature market. We don't invest in wind at CleanCapital, but I'm sure it's the same thing in the wind space. Where we do see the next wave is on the battery side, which is not a mature market, and it's a much more opaque investment, but it's a key ingredient to the future of clean energy. So we have to be actively investing in it, but that's where wind and solar were 10 years ago. What are the right returns? Nobody can probably tell you what the appropriate returns are because we haven't seen the yield play out over a 10-year period of time. So that's we're sort of experiencing in the storage market, in the battery market, what was experienced, the immaturity that was experienced 10 years ago.
Yeah, thanks for raising the issue of storage, because I'd like to get to that and get everybody's opinion on that. I mean, the general issue here obviously is that wind and solar are intermittent. So if you've got 60-70% of your power coming from wind and solar, which not what we're aiming at, what many countries are aiming at, then there are going to be times when you're short of power. And the obvious way of dealing with that is to put power into batteries and store it there, and then pull it out when the wind drops or when the sun goes in. But that requires battery storage on a scale which has never been envisaged before. And we're beginning to get there, but I'd be interested to hear what your thoughts about this are. I mean, you've invested in some battery ventures, I guess, Jiong Ma.
Yeah. Yes, I think we invest in battery companies and our fund too, and many years ago. Batteries, from technology perspective, there's a couple different, I guess lithium-ion battery is sort of today that's kind of most people using that. For different application, you have to have different technology, right? For EV, you need like lightweight, higher density. For electric plane, all the other flying drones, you probably need even more lighter weight, but a high energy density. But for like large-scale energy storage, so maybe the weight is not an issue. It's more about lifetime and others. So different applications have different technology. From venture perspective, this is not an easy space to invest because the returns. Most people never made money investing in battery. So even us, we had success, but then we didn't sell the stock. So from our perspective, we're looking at a more maybe some innovation to kind of improve the existing battery technology. So they're not going to purely reinvent the whole wheels together. So maybe investing, innovate or the software to really kind of managing the battery system to make it more efficient. And also more importantly, we are trying to work with, we are creating sort of the system so we can work with our EV and talking to the utilities and to scheduling when to charge your car. So utility doesn't have to overbuild the peak power to like everyone charging their cars at the same time. So we can make the system more balanced, rebalance the system more efficient. So that's how we think about, we invest in companies who are using the blockchain technology behind to really enable retail, energy retail and C&I customers able to bring more renewable online, so they can, so there's more sort of the technology platform to help bring more, strained resources, like Airbnb. A lot of people can, really rent an apartment for someone else to use. Similar here, we have those kind of shared concept to be able to apply into this sector. So that's how we think about it today.
So you're doing Airbnb for batteries. That's interesting. Yeah, okay. Yeah. Well, Martin, have you invested in batteries?
We are investing in battery storage in a couple of different ways, both sort of on a standalone level, meaning sort of the project itself is just a storage solution, either at a utility scale tied into the grid, or on a distributed level behind the meter, perhaps, with either a corporate customer, a big building, or something like that. And then we're also seeing a lot of opportunities to invest in battery storage that's sort of integrated into sort of a bigger renewable energy project. So like a large solar project that has a smaller battery solution to help create a product for whether it's a utility or a corporate buyer, but give them better definition and certainty around what's otherwise a variable resource. So definitely interested in that end of the market. Now, I think the greatest challenge for battery storage, and we're seeing this play out differently across many different markets, is the regulatory regime sort of supporting its deployment, its integration into the grid. Because a battery can do a lot of things. I mean, a lot of people think about it, in the context of an electric vehicle or your iPhone or whatever, where you can charge it up and then you use it and then you charge it up again and use it again. But the battery can actually, when integrated into the utility grid, provides a lot of services to the grid. Frequency regulation, and a lot of other ancillary services. And in most power markets, the regulatory construct doesn't exist such that the owner of that asset can actually charge for those services. Now, that does exist in certain markets, but in most markets, it's not advanced enough yet. Utilities have been sort of tasked with all the requirements around creating or maintaining grid stability, et cetera. So they're using their resources, which are generally peaking plants, which are very dirty, coal facilities, and if we're lucky, they've got pumped storage, hydro. So it's really a regulatory issue that's kind of holding the market back. And I actually think that if it weren't for the big push into electric vehicles, which has really driven battery costs down and continues to do that, we'd probably be even further behind because, again, the regulatory environment is just taking its time to sort of adapt.
It's a real interesting point that you've raised there. Let me raise that more generally. I mean, a lot of utilities do seem to be unhappy with the growth of distributed power, put it mildly in some cases. Do you see a need for extensive regulatory changes if clean power is going to take off?
Absolutely, absolutely, and I think that's it's across markets in the U.S. and sort of more globally. Utilities are essentially creatures of regulation and politics, and in almost every country that's the case. In some places they're monopolies. So it's a very difficult model to change, but we're seeing it change. I mean, the U.S. is probably the best example globally where you've got different markets within the U.S. structured differently, and you can see kind of how they adapt to change. And so it gives you sort of good test cases to see kind of what the best model is. And it's interesting. I spent a lot of time in Japan, as we have a number of projects there. And Japan, had sort of, the classic monopoly model where each utility was vertically integrated and had a monopoly over a certain territory. And the Japanese government has decided they want to completely deregulate the market. Now, clearly, that's an ambitious goal in a place like Japan, but they're actually making it work, and the market that they're looking to sort of model themselves after is the PJM marketplace here in the U.S. to create a competitive wholesale market.
Yeah, I would just add on the battery storage front, if you look, again, looking sort of at the future, I think owning battery storage as a general matter is a great place to be, because if you just look in California and you look at the duck curve, I mean, there's a time, there's many times during the day or during the year where there's just an amount of renewable energy that's hitting the grid at the same time. That's sort of it's unsustainable in California. It's becoming unsustainable in Massachusetts increasingly, I've been seeing, and that's just going to be, in the absence of battery storage, that's going to be the case. So if the future is cleaner and more distributed, you're going to have a battery storage solution. Then you just look at, just 2 days ago, PG&E shuts down one of our solar projects. You don't own it, but it's it's in Northern California, and it presented an opportunity for us at CleanCapital to reach out to the superintendent and say, this didn't have to happen to you, because you could put a storage facility right next to your solar facility, and you could actually be powering your school while the rest of Northern California has the lights out. So there's a lot of macro reasons why battery storage is a key ingredient to the future. But it's interesting, as solar investors and wind investors, it's a very different asset class. Martin touched on there's different ways to make money on a battery, and for those of us who have been in solar and wind finance, project finance, it's actually a much different investment. It's more variable. There's multiple revenue sources. It's more variable. It looks in some ways like a natural gas peaker, where you're trying to sell to the wholesale or whatever they do. And so we're kind of we happen to, as clean energy investors, back into the market, because batteries are naturally going to coexist with solar and wind, but at the same time we're having to learn and get comfortable with effectively a new investment class to invest into.
Yeah, I mean, you said that wind and solar are sort of relatively mature, but that's certainly not true of batteries. And the technology is still evolving quite rapidly there.
And to the example I used earlier, which is you could pretty much predict the price of a solar project within 2% or so these days. I think that's way off in terms of storage. I think an investor could bid $100 for a battery project, and they could bid $150, and probably have equal explanations for why that makes sense.
John, could I ask you, I mean, you're at the venture capital level, so you're seeing the early stage technologies. I mean, are you seeing interesting new ideas in energy storage coming in, or are they all basically lithium-ion batteries?
Yeah, this is a very good question. I think there's a lot of innovations in the chemistry and how you really, starting from, very different materials. I would say probably 10 years away, maybe even 20 years away in terms of, reaching the commercial. But we definitely see, especially in a lot of universities, putting resources behind. And, one of the challenges is the cost, right? It has to be, much lower cost and overall if you reach a certain scale, and reliability, and also environmental factors. So those, we definitely putting a lot of effort looking at some of the innovations, but we've been very cautious investing in them, because it might take 20 years, and our fund life is 10 years. So it might be beyond our sort of fund life for each fund. And we actually also see, just to touch two points. One, sort of the utilities are willing to, I mean, before it's all about economics, but today they're willing to work with us on, they call it regulator putting a sandbox idea. So you can test different construct into the sandbox, and so not constrained by the regulation. And so we see some of the major innovations are coming out there. So that's sort of the really important. Another one is, I I think the carbon pricing or electricity pricing. But today, you know, we are not really sensitive on time of the day of use the electricity, right? And because a lot of electricity are so cheap, especially in the middle of the country. And so if you have some real-time pricing sort of associated with the behavior, you can really change the equation. So that would also help reduce the burden of storage. So we're sort of looking at it as a holistic way to solve the problem here.
Okay, yeah. It's just as a background, it's worth pointing out, just in case some of you don't know, that, 10 years back, a kilowatt hour of battery storage cost about $1,000. Today, it's about $100. So it really has come down quite spectacularly. Columbia just invested in a big new thing called the Columbia Electrochemical Energy Center, which is a big battery research center. And the guys there are saying that they will probably get the cost of lithium-ion batteries down to about $50 a kilowatt hour within the next few years. But there are also some radically different technologies out there, but they're very, very early stage at this point. Let me just sort of push things in a slightly different direction. Go back to something I mentioned early on, which is that we really do need huge investments in renewable energy and clean energy, and if we're going to come anywhere near the targets, Paris targets and things like that. Do you see that kind of that scale of money being available? That's an obvious question for BlackRock, given how much money you guys manage.
Yeah, the short and simple answer is there's no lack of capital. There's plenty of capital available to invest into clean energy infrastructure. I think the limitations are generally regulatory, and by that I mean there needs to be an economic model that supports investment, and you can think about it more broadly for infrastructure. Whether it's, just to use an example, whether it's investing in, road infrastructure, ports, rail, any of your sort of classic infrastructure, if there's not an economic model that supports the investment, by which I mean somebody who's going to pay to use that infrastructure over a long period of time so that you can get a return on the capital deployed. If that doesn't exist, then it's very challenging for private investors to make that investment. And the U.S. classically has followed the approach of kind of a taxpayer pays model for infrastructure rather than a user pay model, which is why you have so many more sort of private infrastructure projects in Europe and in Australia and other parts of the world, because they've digested more of a user pays model. So there is a mountain of capital available. We're talking to those investors every day as we're talking to our investors and raising money. The investors that we meet speak for trillions and trillions and trillions of dollars of pension capital, of insurance money, and they would love to be able to deploy more and more capital behind the space. But you need to have sort of a sound economic framework into which you're able to deploy that capital. And just to make clear, that's not calling for subsidization of the sector. We are well beyond the point at which this sector, generally speaking, needs subsidy. But you do need to, again, just sort of have the right regulatory framework to enable investment.
Add anything on that?
Yeah, the statistic that comes to mind is that $2.5 trillion per year is needed through 2050, according to Bloomberg New Energy Finance, to achieve the goals in the Paris Agreement. And we are woefully short of that on an annual basis. So it's interesting, hearing Martin say the capital's there, the need is there. So then the question is, what is the misalignment? Why are we not able to, if we're taking climate change seriously and and tackling it seriously, what is the disconnect that we can't get that capital that's interested in investing in that space, wanting to invest in that space, into the space when there's such a dire need to do so? I do think there is a policy component to it. I think, when you look back at when, over the last 10 years of clean energy in the United States, when the public officials got, looking here in New York, when public officials in New York got really behind clean energy, things started to change in New York. In New York, New York was the laughing stock of clean energy 5 years ago. And now there's solar plants and wind plants coming up everywhere. We're going to hit 100% renewables by 2040 or whatever the year is. Back in 2002, Terry Tamminen worked for Arnold Schwarzenegger, and he came out with this idea of 1 million rooftops, million solar rooftops by 2010 or whatever. And everyone said, "You're crazy, that's crazy." Well, he hit the number. The policy makers were behind that. He hit that number, and California led the charge on growing clean energy. So there is as much capital as wants to come in, and as much of a need there. I'm still convinced there has to be, and to have any chance at tackling climate change, there has to be an intense backing by policymakers, certainly worldwide, and it starts with the United States, and unfortunately it's lacking.
So what does that look like exactly? I mean, are we talking carbon taxes? Are we talking renewable portfolio standards?
Renewable portfolio standards. It could come in many different ways. It could be, there was the old cap and trade. I'm not a policymaker, so I don't have a prescription for what I think is the best answer. I'm sure many smarter people here can come up with the ideas, but I know it needs to happen, right? There has to be something better than a handful of states. Thank God it's the biggest energy users, California and New York, but it's got to be better than what it is now.
John, you want to add anything?
Yeah, I agree. I think the U.S. is waking up. If you look at the globally, Europe is ahead of U.S. because they are their energy is more expensive, and you look at the UK and Germany. And the grid is probably not as stable as here, so that's why they're way ahead of us in terms of policy. France introduced a hydrogen-powered car in Paris, and taxis, a lot of them are hydrogen-backed. And so that's sort of the taking a stand on the policy front. And I think U.S. is learning, and Texas, California, New York, the three states, is way ahead of the rest of the pack here. So I think everyone's waking up, and I think Martin mentioned Japan, also Australia. They also way ahead because Australia has a major issues with their grid, so they need to change. And so do Japan. So we see some of our companies actually doing more revenues and a pilot plant in Europe and Japan before they come to U.S. Sort of way, we almost have a other market ready than U.S., so we can come back to educating the regulators here to say, here's what we did in this country with this sort of the community, and so to convince the regulators here. I'm just adding one more point. I think the entrepreneurs today are much higher quality than 10 years ago to understand about the space. So you see a lot of very seasoned entrepreneur want to come here to lead companies in space, to really kind of have that kind of mission, not just making a lot of more money, but also the mission. So we see that's very important because a lot of our companies' success really based on the management team's quality. So I think that's really important, and we see this sort of the momentum really coming together, and the corporate buyers are willing to pay higher multiples today to buy the companies from us. And they also want to invest in our fund as well. So overall, I'm just saying there's a lot of momentum to kind of drive the more capital, more innovations in our sector.
Thanks. So far we've been talking about, principally anyway, about the electricity system, power generation system. And if we're going to meet the Paris targets, we don't just have to drive fossil fuels out of that, because that in some sense is the low-hanging fruit at the moment, actually. We've got to get fossil fuels out of transportation, out of heating and cooling buildings, and heating and cooling water and stuff like that. So that's a long way. Any of you guys investing in sort of clean transportation? And what do you see about that area as an investable area?
So I would say we're sort of indirectly investing in that, our investments in distributed power generation, including distributed battery storage, we're expecting will sort of link up, if you will, with the infrastructure required for EV charging. at the residential level, at the commercial level. So, those, it's interesting that the technology is sort of there, but that's a massive planning exercise that I think is, there's going to be significant challenges there to really expand. Because if you think about it, we're currently living in the model where there's a gas station, however many blocks, all along the highways, and the transportation system for commercial and personal use has really been sort of built around that. So, it's sort of, there needs, given the amount of infrastructure, physical infrastructure, that needs to be built, not to mention the capital that needs to support that build out. There really should be a lot of thought put into the design for how those systems are going to be distributed, before everybody just starts building their own. You could imagine, it seems like for personal mobile technology, you've got your Apple charging, device, and you've got your, I guess, historic BlackBerry charging device. Then, and it seems like there are two. So when I travel and I carry all the cords I need to carry, it's now at least two to power all the devices. You could imagine if every auto company had a separate charger, physical charger for their car, how complicated it would be to have this scale. So I think that, there are a lot of challenges. I think that, we're at a point where people are getting ready to meet those challenges. But I think, again, it's another way in which, policymakers really need to get involved and help, along with business, figure out the right approach.
I just add one. We actually invested the company in 2012 and 13. So our investment thesis is if the EV take off, our company would be the land grab. So today the company name is called Chargecoin. It's about 70% North America market share, and then we started expanding in Europe. So initially, they have to build charging stations, and they started with Apple and Google campus. That's where a lot of those companies have money to buy the infrastructure for their employee. But today, we have product for it's just multiple product for fast charging for home, and the companies really become a more software and network company than a hardware company, because you had to coordinate with the utilities on the charging, and so it's so I think this sector is definitely taking off, and and I think people who come with wireless charging, some other mechanism, be able to kind of integrate through the charge point to offer kind of one-stop solution. So it's a very interesting area.
Thanks. So we're actually 3/4 of the way through. We've got 15 minutes left, roughly speaking. At this point, I've got to throw it open to the audience and see if any of you guys have questions you'd like to pose. Yeah, lady at the back up there. You had your hand up. Yeah, that's you. That's right. Yeah.
So at a very practical level, the ITC expires, I think, in 2023. It starts going down to 26% next year. So the ITC will still be around. But to address, I was one of the few people who probably wanted to see the ITC expire in 2016. Because I think our industry would benefit from the ITC ultimately coming down and expiring. The market will adjust. If you no longer have that 30% in your capital stack, your construction costs they'll have to shave a little bit, and the panel manufacturer will have to shave a little bit, and you'll ultimately still get, and then the costs are naturally coming down on their own. So I look forward to that shakeout when that happens. I'm not sure that's a shared sentiment from everyone in our industry, but so that's on the ITC. The bifacial thing, we actually have a deal that we're looking at right now. It's interesting that we had to slow play just so we could understand the bifacial issue. That's just for everyone's benefit. The tariff on solar panels wasn't going to apply to bifacial, and now is going to, I guess, apply to bifacial. So we're trying to figure out how that changes the economics. But I think there's, it gets back to my point prior, which is policymakers can get behind clean energy and really build on the already existing momentum, or they could get in the way of it. Unfortunately, with an amazing opportunity in front of us, both economically and socially, to address climate change, we happen to have someone in the office who wants to do the complete opposite. So you're going to fight that friction and fight and that resistance, you know, for as long as necessary. But I think the general tailwinds, where I'm very confident, is the investors are there, the energy sector is increasingly there behind clean energy, and you know, we'll continue to battle through the friction, whether it's another year or 4 years on top of that. I still think the momentum is just so strong at this point for clean energy that even bad policymakers and temporarily in the White House can't slow it down ultimately.
Nuclear industry told me they felt like all the stuff creating a weird market situation. That was their. Do you think we do have no subsidies? I mean, I think we can all agree there's political. We invest, not invest. Is there climate change? People have different opinions. If whatever there were no subsidies, do you think this could still bring a good return on investment?
I actually think that we're at a point now with wind and solar, and again, batteries are a complement, but wind and solar is the most economic form of power generation in almost any market, and pretty soon will be every market, and that's based purely on non-subsidized economics. You know, I'd be a big fan for all subsidies to be pulled from all forms of power generation and let it compete. You know, renewables did benefit from subsidization across the world for a period of time. Oil and gas has benefited from subsidies for decades and decades, continues to. The difference being that they were made permanent in the tax code as opposed to temporary. So there's always a fight every couple of years around renewable subsidization because it comes up to be renewed, as opposed to just being a permanent part of the tax code. So I actually, you know, to tie that to the previous question, I look forward to the point at which the tax subsidies for renewables disappear. They add a tremendous amount of complexity to the financing structures for these projects, and with that inefficiency comes a lot of excess cost. Right now, I think that they're artificially depressing the price of power in many markets. So I think we're not long past, maybe a few years past the point where they're actually needed. And you know, the tariffs have been more disruptive. And, you know, I mean, we've had projects that have, you know, stalled as we've had to renegotiate, you know, value across a variety of participants, as, you know, tariffs on steel were impacting wind projects. Obviously, tariffs in the solar space are impacting, you know, some solar economics. It's having almost no impact on the volume of projects that are going to be built in 2019, 2020, 2021. Obviously, some people are going to make less money because, you know, tariffs got to be paid. But it's really having very little impact. Disproportionate, and it's certainly not disproportionate in the renewable sector to every other sector that's been suffering from, you know, kind of the volatility from tariffs, no tariffs, tariffs, no tariffs.
Decision based on, you know, any incentives. It has to stand on alone. Yeah, that's how we make decisions. Yeah.
I want to tell your nuclear friends that actually they get very big subsidies. The Price-Anderson Act is a very big subsidy indeed to the nuclear industry. There was, yeah, lady there. Yeah.
Yes. Well, I can say the first question about, you know, definitely security. Everyone's worried about, you know, I was recently visiting one of the utilities here, and they showed me their sort of the control center, and you can visually see, the New York City grid has attack from all different areas, China, Russia, and they can show where the attack come from. So so definitely our utilities invest in huge amount of money trying to protect us. So that's given. So I think that every technology, every new solution will definitely introducing sort of side effect. And so the beauty with blockchain actually trying to avoid some of that. So it would inherently have the security nature, but we can talk this offline. So there's a lot of innovations in here to trying to model the user behavior, to say what's normal, what's not normal. So that's like borrowing the technology came from banking industry. Because our banks are very sophisticated today, knowing whether are you the person using your cell phone or someone else. Actually, they understand, your behavior and, the finger stroke, the speed, and your behavior. So similarly, people using that technology today in the grid. So in a way, so grid itself is very sophisticated. I would not worry too much. Second question, the carbon pricing, I think definitely that's a big topic. So that's where, we talk a lot today about policy. And I think that need to happen to have a lot of changes. And but today we don't have that well established here in US. And so maybe that's something Columbia student can work on.
I'm happy to talk about whether carbon should be priced. I think it should be priced. Now the form it takes, there are a lot of different views, whether it's sort of a carbon credit trading regime, whether it's a carbon tax. I mean, there are a lot of ideas out there. I think what would be most important would be to have a serious, legitimate debate among policymakers with the idea that there should be at some point some cost for carbon and using carbon really as a proxy for lots of different greenhouse gas emissions. But I think it's an externality that has costs. It should be priced, but there are a lot of different ways to do it.
Gentleman over there. Yeah, that's you. Yeah.
Well, so I mean, it's interesting, and I think there are two things in there. For a nascent industry with proven technology, it's a lot easier to deploy private capital and build the industry or build the market. The key being the proven technology. I think one area where venture capital is really sort of on the private side, the right vehicle. It's when that technology is not yet proven. And whether it's private venture capital or government-funded initiatives, those are sort of the vehicles to address sort of proving out technology. But once technology is proven, I mean, I would argue that the renewables sector, while granted, receives subsidies in many different countries around the world, including the U.S. through the tax code. The industry was really built by private capital flooding in to grow it, since probably about 2005.
Yes, you're exactly right. Sorry.
I'll take a first stab at it. So there's two thoughts come to mind. One, there actually is a very interesting leapfrog opportunity in many areas in Africa, and I actually, there are people who are actually trying to build microgrids and smaller solar systems to try to displace. I mean, it's amazing. You talk about like diesel generation, also like kerosene lamps is another. Just it's amazing that that's a way that people are still using them. So there are people doing it. There is a leapfrog opportunity for people in Africa to bypass the conventional power plant and go directly to some sort of microgrid. It's happening at a snail's pace, as you point out. And perhaps just one observation is, is there an infrastructure to build that out, right? Is there are there to build out clean energy or solar in any area? You have to have contractors, you have to have supply chains to bring the panels, to bring the inverters in. There's just basic commercial realities. Is that in place? And I don't know the answer to that. Is there a sufficient infrastructure there? And then two is capital. And while there is capital going into sub-Saharan Africa projects, I don't think there is the capital. I don't think the capital is there yet, at least in my estimation, to make those investments. They're still perceived, and whether it's actual or not, there's still a perception that it's risky. Because ultimately, if you're an investor or a lender, you need to know, how am I going to get paid back my money for building this microgrid? And I know there's a lot of interesting structures out there, including build a microgrid and then the local community pays you back through their cell phone, because cell phones are like the personal banking system there. But the big dollars I have not seen going into sub-Saharan Africa in a meaningful way. So I think there's a question of infrastructure, and there's definitely a need and an opportunity. So then you get, why haven't we gotten there? Is it just the infrastructure not there, and is the capital not ready?
Anything to say on this?
Yeah, again, it comes down in part, anytime you're talking about large infrastructure and creating a power grid, is definitely, sort of fits squarely within that category. You need the appropriate government support, and that doesn't mean that the government needs to pay for it. You just need a regulatory framework to enable private capital to come in and support the build out. So, the reason why you don't see it in many places is because the government, the framework just doesn't exist.
I think another point which is actually probably relevant is a lot of these are quite small projects, and so doesn't make a lot of sense for a big Western institution to invest in $5-10 million projects in a foreign country. The administrative costs are quite high, so we probably need a different vehicle. I mean, the World Bank, I think, has made some effort to encourage investment, kind of sort of joint public-private investment in this sort of area. We're actually out of time at this point, I'm afraid. Let me, I hope you'll join with me in thanking the panelists for a fascinating discussion.